GM. GM. So, trade of the day. This one is for day traders, but it's really for anybody because the logic, the mindset of it, the general approach can be applied universally. So, if you're thinking about trading news events, and this goes for breaking news and for news events like today, where it's not breaking news, we know that CPI is being released today. So the difference is breaking news is a sudden announcement that Van Eck are applying for a Solana ETF. Right? That's unknown to the market. It comes out randomly. CPI is known well ahead of time, obviously. We can tell and we know that every month it's going to be on the same time, same week, second week of the month. The day changes, but we know well ahead of time. It's always somewhere around mid-month, right? So, regardless of whether it's breaking news or if it's news that's known ahead of time, the logic for trading it should be to trade after. And you can use other traders' bad positioning to your advantage. So, I'll give an example using CPI. So, CPI, here we are. There's the last 3 CPIs that I have them already marked on the chart. I'm going to go down on replay mode and look into them. So, the logic, the mindset about trading around these areas is as such. Let's go to a 1 hour chart. Let's play it on. So CPI comes out on the Wednesday at the very next candle. So what a lot of people are doing is they're trying to position themselves before the actual news. But what you're doing there is you're just playing a guessing game, right? You don't know. You've no idea of whether price is going to react bullish or bearish because you don't know what the news is. So this is where you can get fooled, right? People can get fooled into thinking they've done a good trade. Let's say you were long here, right? You were long. You're long before CPI and then boom, it blasts off. You're like, oh, I'm such a genius. Well, no. If the only reason you went long is because you thought CPI might be good, you're not a genius. You're just a gambler. You flipped a coin and it came up heads. Well done, but it's no good. Now, the correct way to think about trading around any news or any event is after, right? So after the actual news, whether it's breaking news or whether it's pre-planned economic data, after that happens, especially if it's a significant release, right? Especially if the news is seen by the market to be big, you want to wait for price to develop a consolidation, and then you want to trade either side of that because you know that after the news, positions are going to build up, right? So after the news, here, positions built up on Bitcoin for the next little while. Now, I've shown my purple belts how I do it. There's one method, which I'm obviously not going to reveal. It's not the only method, but the logic I want you to understand is you should take the idea that after the move happens, the phase that follows is going to be people positioning themselves, right? And so if you've waited until the pump happens and then you position yourself, what do you think might happen, right? So try and think through this logic. If I was thinking through this, I would say, okay, the pump happened. Now price is going sideways. And so I would say, because it's crypto, we pumped up, people are bullish, they're getting long. Therefore, if price breaks below this consolidation, there's a good chance that you can play the momentum. So you basically get short and you ride the momentum down. The same can be true on the upside. It can go in either direction. But obviously, if you've had a pump up and then a consolidation, if it loses that consolidation, it's very likely to go all the way down because everybody who got long here is wrong. And so what you can see is after a brief push higher, Bitcoin does exactly that, right? Moves all the way down to the lows. So that logic is completely airtight in terms of after a pump, people will position themselves. If they're positioned wrong, it will probably unwind all the way. Also, if you get continuation, the same thing can apply. So it's not just a bearish thing. Far from it. It's all about what the market's expecting versus what actually transpires. And so when you look at this market, this was a pretty bearish market leading into this CPI move here. Right, let me zoom all the way in. Market was pretty bearish leading into this. And so it comes up and sets a consolidation here after that initial pump that we've seen. And then it breaks higher from it. And so you can play the continuation, and price in this instance ends up going much higher and continuing higher, 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 and you get a nice continuation long. So that's an example of how you can, even with missing the first move, you can still capture a trending directional move. How do you do that? You just think about it in terms of probability. So what you have to do here is test. You have to go back and test multiple different scenarios like this of CPI or whatever data you're trading, and understand that when it breaks either side of this consolidation, you can use that as your kind of bull-bear line. So it broke above, it retested, it held, it stayed outside. That could be your trigger to go long. Remember in the other example, it didn't do that. It dropped back inside, which was your bearish signal for it to retrace. The key thing here that I want you to do today, if you're a day trader, and I want you to do moving forward, is don't react to the news itself in the moment. Most people lose money because they react to the news in the moment. Every single time there is a CPI, and I bet you it'll happen today, if there's a big number, right? If Bitcoin pumps or dumps today, I'm going to go into trading chat, even though I'll warn you 10 minutes before CPI. CPI is coming. Don't have any trades open. If you don't know what it is, don't trade, don't take a position. Pump will happen, dump will happen. Someone will come in and say, why did it pump so much? Why did it dump so much? Why did I get stopped out? Why did the market go down? Why did the market go up? And if you're not careful, you will react to that. You will see it pumping and you'll wish you were long and you'll chase into a long and you'll get wrecked. Or you'll see it dumping and you'll start shorting or get liquidated or stopped out. Do nothing. This pump happened 12:30. The next move happened at 1:20 and the retest happened at 1:50. You're talking 90 minutes later before a proper trade would develop there. Or if you took that breakout one, you're looking at 45 minutes later. Wait. Take your time. Because you're only interested in the days where you see these type of moves, right? You're interested in these type of days because if you bought that break from the consolidation from the square and you had your stop loss below the low, you get a nice lengthy trend that continues for several hours, right? That's completely made up. I'm not saying that's the system. You have to test and figure out a system for yourself based upon after, right? What you're doing is you're allowing all those people who come in and say, what the fuck, what happened, why did this happen? You're allowing all them to make their shorts, make their longs, right? Squeeze it all together and then boom, one side or the other will break and you can make money by following the actual directional move if there is one. There isn't always one, so I'll mention this. Very important. There isn't always a directional move, right? Right away off the initial candle. But how often can you see this? Initially dumps down, consolidates, breaks back up. Look at that move, right? That's the last 3 months in a row. Reason being is that CPI has been very impactful on the market recently because people are hyper-focused again on inflation. March 12th, February 13th. Where are these ones here? March 12th. Let me see. March 12th, February 13th. Because I'm trying to see if there's one that actually doesn't have. March 12th at 12:30, sorry. Here we go. March 12th, February 13th. So I'm trying to show examples here. There's your CPI candle. There's your consolidation that forms, right? Then price goes to break out higher and rejects and comes back down. Then it tries to break out lower and it rejects and comes back inside. So depending on where your placement of stops is, you might have got stopped out twice there. As it went higher, you took the long, it came back inside. That's fine. Went lower, you took a short, it came back inside. That's fine. Right? The point is you're not going to win every single day. But on almost every CPI, there is actually some kind of intraday directional move that's worth catching because volatility comes in. And if you think about it, not in terms of what is the number. By the way, what have I not talked about at all on this? Not once. Not once have I mentioned, oh, CPI came in higher, CPI came in lower, this or that. Because even though that's important for the market's sentiment, it's not important for the day of the release. On the day of the release, the only thing that matters is positioning. I don't care if it's a good number, bad number, all that. That matters in terms of how I think about the next 2 weeks, 2 months, right? But not for that day. For that day, you just take the candlesticks on the chart, the price action, and you build a system around that. Now, that's for day traders. That's sort of like a mini lesson. So I want you to think about that. If you're watching this and you have time, you should have time to go and study the last 50 CPIs before today's one. And then you can paper trade today, or not paper trade, sorry, dollar trade today's one. Don't jump straight in and trade full size on it. Absolutely not. Look at it through the lens of testing, right? If you go and test the last 50 CPIs on BTC and the reaction, and then you go in today and you dollar trade it, low stakes, and you start to build some data moving forward. Now, example for everybody else. So that exact same logic, right? Don't think that this is a day trader thing only. Every piece of news, breaking news, known events, the consolidation that follows is where people make their bad decisions. So this is not a day trader's trade. This is Solana whenever its news was released, right? So Solana had its breaking news pump with the ETFs getting applied for. Breaking news pump, moves up into the highs, consolidates here. Consolidation breaks down over there. You enter a short around here, right? At the end of that candle, let's just say, just as an example, you enter a short there, you stop above the highs, your target is filling in the gap, right? It comes all the way down into the gap and fills whatever, right? Fills most of it in, maybe you exit there, maybe you use a tighter stop. I'm not here to tell you how to trade it. I'm here to tell you the logic. The logic is Solana pumped up into the highs, spent 12 hours there, 13 hours, 14 hours, breaks down. So what does that tell you? The exact same thing. People went long after the good news of Solana. So they are wrong. If it goes down, it starts to go down. What happens? They're under pressure, they're under pressure, they're under pressure. Comes all the way back, fills in the gap, right back down to this sort of order block that we have before the move up, right? So how does that work? Same logic. This move from the moment of the top, right, from it reaches the top to it reaches the end, takes 2 days and 16 hours. Anybody could do that trade. These are 1 hour candles, right? Almost anybody. But anybody, this is an overnight trade, so pretty much anyone can do this as a swing trade. There's also examples of this exact same thing happening on much higher time frames, right? You got I know the Uniswap move was much slower, which definitely would be something that we could take a look at here. So the initial move of Uniswap was this fee switch, massive pump really fast, then it consolidates, right? Consolidates for Friday until the next Saturday. It consolidates for 8 days and then starts to break higher. What happens? Squeezes up even higher. People must have faded it, tried to short it. You can see it even tried to break down. It failed. It came back inside, pushes all the way up. Then on an even higher time frame, that same news turned out to not be bullish. Once what? Once price got back below that original consolidation, right? Pump. Longs get built by people chasing the good news. It does go higher, so they're right briefly. Comes all the way back. Okay, it's been defended. Okay, it's been defended. They're okay for now. As soon as those longs go underwater, what happens? The entire move retraces in 3 days. And that part is where you could have an actionable short trade, and there was even a potential for a long trade there. Although the long trade didn't go to the moon, there's still multi-day swings in there. But point remains the same. Find some news. watch the consolidation after it, understand how positions will be built, longs or shorts, where are they wrong, build a system around it so you can have a stop loss, define your risk, take the trade. GM.